this afternoon, we'll be looking at another high-risk sector. This time it's with a special industry focus on the DNFIs, the designated non-financial businesses and professions. And this time we're going to be spotlighting the real estate sector with our panel discussion on the growing exploitation of the real estate sector for money laundering. And I'd like to set the stage and provide some context of the utilization of the real estate sector for money laundering in Nigeria. I'd like to get straight into the discussion. And Michael, I'm going to start off with you. Now, you're the CEO of a property company. Why is the real estate sector particularly susceptible to money laundering globally? And why is it a high-risk sector? What techniques are being used to finance real estate money laundering?
Thank you so much, and good afternoon, everyone. We all understand what AML is, so you wouldn't want to pause by going into the theology of AML. Real estate is one of the most secure way of preserving wealth, whether the wealth is ill-gotten or not ill-gotten. Also, because of the high return on investment, high rate of appreciation, most of these perpetrators prefer to preserve this illicit wealth through real estate investment. Also, globally, regulation for real estate practice are not very in some countries like the UK, the US, even in Canada. Brokers are not really mandated to disclose identities of those behind the ownership of some of those properties. And of course, you know that these perpetrators will always hide behind the brokerage company to purchase these properties. And because there are no very robust regulation that compel these companies to disclose those who are actually buying this property. So it's like a safe haven. It's a pretty cool vehicle for perpetrators to hide and purchase these properties with these illicit funds.
Yes, the executive chairman EFCC did make that remark that about 90% of money laundering cases are routed through the real estate sector. And I think this is not from the blues. Research was conducted in 2016, National Risk Assessment, that clearly said that the real estate sector was the second most vulnerable. There's a global scrutiny around the vulnerability of the real estate sector, from the US to Canada to South Africa and all that. So the challenge is that it is a big ticket transaction. It's very attractive. It can accommodate huge sums of money. So it opens the door for those that have the big checks, they have the big cash, to keep their money, launder it through that sector, and over time reintegrate it into the former economy. But I'm happy to say that the Money Laundering Prohibition and Prevention Act 2022, just passed by the Senate, had some elaborate provisions that will enable for proper monitoring and supervision of players in that particular sector.
Fantastic. And after that, I saw that you're saying not just discovering, done it after disclosing it. What next?
Perhaps it's helpful in a climate like ours, where the risk is high and the occurrence of financial crimes is high. But perhaps there are those crimes that you prosecute, and there are those ones that you use as a learning point.
Much, and this brings us to the end of this panel session. I must say a very special thank you to all our fantastic guest panelists. I'm sure you'll all agree with me. It has been a very riveting and engaging conversation. Thank you for making our discussion richly rewarding. And of course, to our audience as well. It would not have been engaging without you. Thank you for your vigorous participation. And we hope that your knowledge has been expanded by this session. Thank you very much.